With crypto trading near all-time highs and public interest growing rapidly, we felt this would be a perfect time to host an educational seminar featuring insights from subject matter experts. We're excited to have members of our Incline Wealth Advisors team here, along with guests from Bleeding Edge Capital, a firm that manages its own crypto hedge fund. Today's presentation will be led by Jake Tullis, who will guide us through the slide deck and provide valuable insights into this evolving space. The presentation will last about 20 minutes, followed by roughly 10 minutes for Q&A, and at the end, and we encourage you to jot down any questions as we go along. So without further ado, I'd like to introduce our speaker, Jake Tullis.
Hello, everybody. Thank you, John. I appreciate it, and thank you for having me here today. Before I get into the crypto stuff, I just want to give a little background on me. I am Jake Tullis. I also go by JT, and I run the Advanced Spectrum Fund, which is a hedge fund or private market offering that only deals with digital assets or tokens, crypto. I have over a decade of software development experience. I had a software development company in college, exited that business, had multiple startups thereafter, and started this fund as an evolution of my ability to comprehend systems and build them, because crypto is a burgeoning market and industry, and all of it is just software. So you need to understand software to really comprehend what crypto is and what blockchain is. That's why there's a bunch of guys that look like me in a room like this around the world talking about it, because only the nerds really understand it. And my goal is to help you all kind of bridge that gap of understanding today. And the first thing that is really important to know is that crypto is simply I would call it like a common phrase or word term to describe a new advent of a database called a blockchain. Crypto could not exist without a blockchain, and blockchains are just a different kind of database. That's really what all this is and why we're all excited, because this new kind of database, which hasn't been improved upon since the 90s, allows for the ability to actually own something digitally. And often that is a confusing concept, because people at the moment believe, and you possibly could believe, that you own your digital property, like your photo albums or your videos or, music, whatever it could be. The reality is, since the way databases are made, that they're owned by one entity. So Apple, as an example, on your phone, everything on Apple's device is Apple's. That's what you subscribe to when you click the terms of use and privacy policy. So if Tim Cook didn't like you one day, everything that, you treasure on your phone would be inaccessible in, 2 strokes on a keyboard. And what blockchain does is it takes that concept of a database owned by a company and then breaks it down to the idea of a volunteer for profit, someone like me that has money to buy a computer to store your information and do all the things normal databases do. As a reward, I get the token on the network that I am supporting. And that's a blockchain. So we went from a centralized database to a decentralized peer-to-peer database, which is a really interesting concept. And that process really started back in the beginning of the internet. So the biggest concept I want you guys to take home, if nothing else, is blockchains are changing the internet and how we can use it. It's adding a function to the internet, which is why everyone is really excited about the future of it. In the 60s, there was ARPANET. That was just governments across the world building computers as big as a home, trying to just read instructions. 2 plus 2. It needs to create 4. But it was just reading instructions from humans. And then we connected those computers in the 70s through private budgets and Oracle and Microsoft, Apple, and we created a network that we call the internet. That came live in 89. From 89 to 2009, that was Web 2. So the first 30 years, all it could do is read. The internet, all it could do is read individually. 89 to 2009, we could write to it. So me, you, anyone in the world could just write to the internet. And then somewhere else in the globe, they could read what I wrote. A tweet later later down the road, but it could also just be AOL. That was like the first messaging app that came out in the early 90s. It's the same process as a tweet. What allowed AOL to grow into a multi-billion-dollar business are protocols. The hardest part about blockchains is understanding that these things are raw material. Anyone in the world can build whatever they want with them. So AOL looked at the internet, saw a protocol called SMTP. It's called Simple Message Transfer Protocol. You don't have to worry about it. You've probably seen it in emails or something. But that's still used today. Over $100 trillion of value utilizes that protocol. And Ethereum is like SMTP, but for ownership. That's 2009 and looking forward. So there's a new function of the internet called own. We went from read to read plus write, and now it's read plus write plus own because of encryption. And we're going to skip that, but basically everything on a blockchain is password protected, and it allows you to store your data on someone else's computer without there ever being a risk of a compromise. There's over 2.5 trillion that you could take from Bitcoin, right? And it hasn't happened yet. It's impossible. It's the most secure way to store data because it's all across millions of computers versus being owned by one entity. It gets rid of a single point of failure, which makes it the most secure system in the world. You have to get more than half of the entire network, and you have to break 500 something thousand devices on Bitcoin inside of 10 minutes. And then the password changes essentially. So it's incredibly secure. And next to the Bitcoin network that started there in 2009, there are all of these other things that have been built. And all of these things come to the tune of 21 million different tokens. Literally, there's so many tokens. It's a massive market. And what they are all doing is taking the concept of a blockchain and then adding their own flair to it. They give it a specific purpose. They go down into a niche, or they use it for government projects. There's a really cool project to give you an idea. A little satellite thing. It's like a reader. It sits on your yard. It looks at satellites, and it gets paid in its native token called Geode to pay you to buy the node to feed satellite data to the government. And they pay the network for that. It's at like a 300 million market cap. But the idea I want you guys to get is these altcoins right here. This is where they use blockchains differently. And they allow for really cool stuff like putting a bank online without any employees. Another example would be Aave. It is a protocol. So anyone in the world can use it. It's raw material. Donald Trump actually used that protocol to build World Liberty Financial, and he offers online banking services through Aave. He just put an interface on top of it. And Aave is a bank with 300 billion in volume the last month with 0 employees, utilizing blockchains and smart contracts. So the future of the internet is being able to build vehicles for people to own things, and you incentivize people to contribute to that idea with the token because you can make a real return on that. Ethereum pays out about 18% a year on a validator node. Bitcoin miners can make anywhere from 5 to hundreds of percents, depending on their cost of energy. There's real capital markets here. Taking a turn out of what this stuff is, there are some really important things to know when you're investing in crypto. A lot of mainstream media is going to tell you that it's risky, it's not safe, all this stuff. And everything I just covered should help give you some faith to understand that you cannot lose your crypto unless you give your keys or your information or your password to someone. And unfortunately, these people are getting really crafty. So you may give your information to them without you thinking that it's a scammer. And that's generally how things get compromised in crypto. And the past, I would say 12 years, the government has taken a very anti-crypto approach, but Trump is making a lot of that change. We just passed the Genius Act. There's 4 more bills coming down the pipe that he introduced during Crypto Week. The SEC chairman has changed to a crypto veteran. The CFTC chair has changed to a crypto veteran. Used to work at Andreessen Horowitz. It's actually pretty incredible. So this stuff is getting more and more credibility. What once was a headwind has turned into a tailwind, and we're just going forward. To dive deeper into the regulations, in America, we've actually been behind. Since this is a global network and it's on the internet, every country's view on crypto actually matters and makes an impact. And as you can see here, there's a lot of countries that have already been in the process of regulating this stuff and implementing it. China has been using blockchain in their society since 2018, roughly. You have the EU with MiCA. That's actually already here now, and that allows people to register real companies. They go public. It's a legitimate business in Europe, Hong Kong, China, India. America's actually been the laggard here, and all of that is changing moving forward in a very big way. I mean, the president of the United States has a DeFi like company, so pretty crazy. And since everyone is flooding in to this market, it's important to know what to look out for. The biggest scam that I see, and I make content, I have a podcast, YouTube channel, I get a lot of DMs from a lot of people. The biggest thing that I see is a pig butchering scam, which is where you establish a relationship with someone through, it could be a post where you'll just see everyone promoting, hey, this guy made me all this money, or something like that. They try to, bait you in a lot of different ways, as detailed in the left column. And when you contact them, they show you screens, it looks real, but what's actually happening is they have their own website with their own server, and they're just faking everything, manually typing in stuff into a database and showing you a website. The second you wire money into that website to try to make the same returns, they're just going to increase the numbers on their database, make you think you're rich. They'll keep doing that until you want to pull out. And then they'll say you need to pay taxes before you pull it out, which is not true. And then you'll just keep wiring money to get access to fake numbers, essentially. And they'll do that until you realize what's happened. That's the worst one, and there's a lot like that. But in that scenario, those are the stories you're hearing in mainstream media about people losing their crypto, getting compromised. It's crafty scammers making you think you're doing something good when you're not.
Hey Jake,
The
real
best,
quick,
yeah.
on the types of cryptocurrencies. So stable coins have been pretty popular, and you'd mentioned World Liberty Financial that Trump and his sons are kind of backing. Stable coins even came up in the JP Morgan Chase earnings report. Jamie Dimon mentioned something about stable coins as well. So, and then obviously, like you mentioned with the Genius Act, I know there was a piece in there about
Yep.
stable coins. So what are, uh, I mean, I have a general understanding of Bitcoin, but what is really the difference with stable coins and, using those as an investment vehicle?
Yeah. So stable coins are not an investment vehicle. They are like dry powder that's on chain. You could think of it that way. When
Okay.
you, we'll just go into the consumer experience first. So as an investor or, a user of crypto, to use a stable coin, you have to link a bank account to an exchange of some kind. You put a dollar in, and then you get the exact equivalent of a token out. So there's always a 1-to-1 ratio. If there's, well, right now there's $286 billion of stable tokens. There's exactly that many tokens that are stable tokens out there as well.
Got it.
And it's a great business because on the issuer side, you park that money in T-bills and you get free yield essentially because it costs you, once the network's built, it costs you virtually nothing to mint a token, right?
Hmm.
So it's a very exciting business to be in. There's a lot of capital incentives to do it. And from the consumer perspective, it's really just a way to park money on chain or in crypto without having to worry about the price fluctuations because this is a volatile market.
Yep.
That's the general premise.
It sounds like it's
And
comparable to a money market, so to speak, in a normal bank account.
except you don't get the yield for a lot of them. The issuer does. The
Got it.
real purpose is to have your money on chain. And
Yep.
the reason why you'd want to use a stable coin versus the traditional rails, and it goes back to blockchains in general, it always does. And on Ethereum, which is one of the slower ones, it's still incredibly faster than anything that they use right now. But I'm just going to use Ethereum. You can send and settle a transaction all within 20 to 30 seconds. If you have any experience using Venmo or a credit card or anything else, you would know that the settlement happens after the message.
Yeah.
First thing when you swipe your card is your local ledger. Nothing actually happens. No money is moved. It just says minus $100. And then who you transacted with, their local ledger says plus $100. And they roll that up all the way. There could be 10 to 20 different reporting architectures to where the money will actually settle. So the $100 then actually settles. The message and the settlement are two separate things, and it can take days or weeks, depending on how much money. On Ethereum, if I sent you 100 stable tokens, you would get the message and the settlement at the same time. It gets rid of that lag entirely. And the intermediaries. Credit card companies could keep all of that, or they could literally say, we do this for 0.1% or something like that. A lot of those 3% fees, 60% goes to that roll up architecture I was describing.
Yeah.
So people like JP Morgan could save billions using stable tokens versus traditional rails, as an example, since they have trillions that they move. And I just see in the future there being an infinite amount of issuers of stable tokens. And you may not even know your dollars are stable tokens. Again, this is a database. So you don't choose a bank, you don't choose a social media app because one uses Ubuntu servers and the other uses Heroku. You guys don't even know what that is. You've never thought about it. And in the future, that'll be the case. You won't know if an app is running on Ethereum or Solana or Avalanche. You won't know. You won't know what kind of token it is. This is all just nerd stuff. You guys already don't know that stuff. So it'll all be obfuscated in the fullness of time, I guess is my point, for the user's experience. We're still early, and that really, a lot of people don't really understand how early we actually are. And I would say stable tokens are the iPhone moment for crypto. It's one application of blockchain in an infinite world. So,
Got it.
There's a lot of room there.
Okay, cool.
And on that topic, we did just actually pass this morning. We're at 4.2 trillion, which means crypto is now officially bigger than the largest company in America. For the longest time, all of crypto was smaller than the largest company, like genuinely. So there's 21 million tokens in all of crypto, right? Solana, Avalanche, XRP, XLM, Cardano, everything you hear about. There's 21 million of those alts. And they all equate to 4 trillion, which is basically the size of Nvidia, one company. So that's how early we are. In my opinion, we could see everything that is of value tokenized in the fullness of time, maybe by 2035, 2040, 2050. I don't know when, but it makes no financial sense to be off chain as a financial institution, as a media company. Makes zero sense, which is why I am very excited to be investing in the space. I could see this easily get to 100 or 200 trillion in the fullness of time. And then, as I had alluded to in the beginning, there's a lot changing in crypto here domestically that just simply wasn't true even a year ago. I don't see the next 3 years of Trump's term going any other direction. I worry that maybe the Republican Party might be too associated with crypto, or crypto too associated to one specific party, because this really should be bipartisan. However, a lot is changing. And one thing we hadn't talked about on this sheet is AI integration. There's a really cool story that I'll end with. A great engineer literally built a agent, or like a robot AI, GPT, a Claude. It's a robot. He put it in an isolated server, and then he added another one. And he told them both they had to come to a consensus of how they could make him rich. That was the idea. And in about 2 days, they had a set of instructions for him. He had to get a Twitter, and he had to get a meme coin, which is a cryptocurrency. And the agent went onto Twitter and asked for donations to start a meme coin. A VC gave them 1 Bitcoin. At the time, it was a $50,000 donation. They launched a meme coin and created almost $1 billion of value completely autonomously. AI in a vacuum chooses on-chain behavior because they don't have an identity. They cannot KYC or AML. They cannot get a bank account. They do not have an address. They do not have a phone, right? So on-chain, they have everything they need to transact in value. And we are seeing an explosive adoption of blockchain technology with AI. It makes no sense to have an AI, for personal use. Now, for a company, it makes a lot of sense to have a $10 billion model they can charge you for. But from an actual consumer perspective, it does not make sense to give your agent access to all of your stuff, when if all of your stuff was on chain, it would have autonomy over it, controls. You could completely federate and give agency and revoke permissions from the AI, all in whatever the app would be. And we're seeing immense adoption. It's probably the largest growing sector pushing this market cap up. And AI is not going anywhere. Blockchain is not going anywhere.
Mm-hmm.
I only see this improving over time.
Yep. So the ways to invest, right? I mean, do you have a preferred, obviously last year we had the Bitcoin ETF that got approved and passed. There's several other ETFs that can be invested in. Where do you suggest for people to look or to access, or some of the best ways to invest in crypto?
It depends on your competency level. If you don't want to miss the boat and have no idea what you're looking at, don't know anything, my general, opinion would be to stay on Coinbase. It is a public company. They offer insurance. They have shareholders. It's, getting regulated appropriately here in America. It's probably the best platform for someone just starting out. And I would not get out of the top 20 on CoinMarketCap. If you go to coinmarketcap.com, I would just start reading just down the list of the top biggest or the 20 biggest protocols and go to their Twitter, just do some research always, but if you weren't even feeling that, I would just put it all in Bitcoin. The rest of it really can change tomorrow, but I don't think Bitcoin will ever change or go anywhere. But I would do it all on Coinbase or Kraken. Kraken's great too, but it's a little bit more technical in my opinion.
Yeah, gotcha. Cool.
Does anyone else have any questions? Anything at all, even if it's outside of this deck here. I know probably too much about crypto, so I will field any questions. Another thing that people really confuse is the idea that, blockchain and crypto are the same thing. Like crypto, the meme coins, all of that stuff, that is crypto. Blockchain is a concept that is built by like the best engineers in the world, like PhDs. My fund and what I research is developments in blockchain, so all these meme coins as an example. Actually, it's embarrassing as a professional in this space to tell you that the trailing 30 days, the best performer was Fartcoin, but it did like 280%, I think, or something crazy like that. That is just gambling. It is like an online casino, but those tokens use a blockchain. They use Solana to publish the token, to support the liquidity of that token, to pay the fees. So when you buy a meme token of any kind on Solana, you're going to pay a little bit in Sol. So Solana, the protocol and the blockchain, makes a lot of money from one application being meme tokens or gaming, really a casino of sorts. Every single transaction you make buying and selling these things across the millions of meme tokens, all that eventually will boil down into Ethereum or Solana. They have over 90% of the meme token volume. So that's why I recommend staying in the top 20. A lot of the top 20 are blockchains that have an immense amount of applications built on top of them. So you might miss out on Fartcoin, which is one out of probably 100,000 that do well. Or you could just be more conservative and, own the databases that those crazy things are using. Because Solana may not be doing 300% a week or a month, but it is up 900% from the bottom. And, I don't think anyone's going to be mad at that kind of return with a much more conservative approach, because conservative in crypto still is crazy returns, essentially. So there's like there's a picks and shovels approach where if you just stay in the top 20, you're going to be buying good stuff. They don't get to $50 billion in valuation from hot air and memes and attention. They get there from real builders building stuff that people are using. A lot of the stable coins are on Tron, Ethereum, and Tron, I think, is number 9. Ethereum's number 2. So you're going to get, 90% of the stable coins on those two alone, as an example, instead of investing directly in Circle. Circle pays Ethereum to do their business, essentially.
All righty, well said, Jake. If there's no further questions, Jake, we obviously appreciate your time here immensely. If you've any questions about where you could invest into crypto safely, feel free to give our team a call. But Jake, again, we appreciate your time, and everyone have a great rest of your day.